You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not necessarily indicative of future results. This is training. This is something you will research and make sure that it fits you. So please take notes. Dr. Adrian Manz is here, and he's with Trader Insight. He's going to be talking to us about trading by the numbers, strategy and discipline of the master trader. Psychology has played such a huge part in this event, even yesterday and today. His website is traderinsight.com. Adrian, I'm so glad you're here. You're self-muted, and you can come on in now. I'm going to make you the presenter. Remind me, do you like to see the question box, or do you like me to hold them for the end?
I would take questions as we go. That's fine.
All right, then I'm going to count to 3. It's going to knock your microphone out for about 3 seconds, and then you'll be back. And you're back. So thank you for joining us. Sorry, we're running just a little bit over time today. We had a little technical glitch this morning that we never quite recovered from. So I appreciate everybody being flexible.
Well, that's the key, right? The internet stuff is not always what it's cracked up to be, I guess.
You know, when it's good, it's great. When it's not, it's really bad.
Right.
So
right.
I'm going to mute myself and you take it away.
Okay. All right, you guys, thanks for being here. This is, so I don't really know, most of you, obviously, so I don't know what you're focused on. Some of you are focused on options, futures, stocks. We're mostly stocks and ETFs and futures. So this is going to be a presentation that's just about what we do for a living and have done for a living for a very long time. So trading by the numbers is all about the way that I approach the markets, the discipline that I use to approach the markets, the psychology that I use to approach the markets. And today I'm just going to limit this to one specific trade that we do, which is in the triple Qs. It's very dynamic. It's something that happens every day. It's the focus of something that I put out there for free every day that you can subscribe to later in the broadcast here, that goes through and gives people my strategy for what I'm going to do. And you're going to see why I do it the way that I do in a minute. But let me just get into this and say that when I say we, what I'm talking about is Julie and myself. So here we go. Julie and I have been trading together since we were grad students. So obviously we're a husband and wife trading team, which to a lot of people seems like a recipe for a divorce. I'm going to tell you, we've been doing this for going on 27 years. We started in grad school when we were both working on research and trying to figure out sort of where you can pull enough data from to get some really good stuff for, I'm just reading a comment here. Okay, some good stuff for crunching numbers, for crunching statistics, for figuring out what's going on in the financial market. So we went to Claremont. Claremont is a graduate school out here in California. We got our PhDs. I got my MBA at the Drucker Center. Peter Drucker was on my committee, and it was very instrumental in getting me started with just moving down to the floor of the New York Stock Exchange to gather data, gathering data off every exchange on earth, and just crunching those numbers and figuring out what do the numbers tell us. That's been the foundation then for everything that we've done since. So as I said, we were grad students. We both got PhDs. PhDs teach, and this is something that was a passion for us. We thought we were going to, get out of grad school, go work for McKinsey and Company or somebody, and then wind up back in the university teaching. Instead, what we did was started trading, never actually had a job. Neither one of us has ever done anything outside of trading. And once we were in this world, we decided that the place that we were going to teach was also in this world. We're going to teach what we knew, focus on teaching other people how to analyze things, how to find confluence of indications, how to go through and crunch some numbers and figure out what's likely to happen in the markets tomorrow. You can see us there. Some of that is early on, some of that is later. We've got a tight connection with the New York Stock Exchange, just always have. When we started trading, that was the place that you knew the guy on the other side of the trade, you knew who the specialist was, you knew exactly what the psychology was of the person who was handling the trade. We've maintained that relationship over the years. We get down there as often as we can. You can see us down there at the NYSE on in the bottom left there. We had a fun event for our guys last year. Going to get down there again. But generally speaking, what we always loved about it was the predictability of the data. Now, as time went on, of course, NASDAQ became a marketplace that was also easier to predict. The markets in general all got very automated, let's say, right? The ECNs and it started with the island and Instinet and all that stuff. And when ARCA came along and became part of the New York Stock Exchange, actually bought the exchange for a very short period of time, it was a change to the way that we did business. So for us, we then added NASDAQ. That was our big shift over 27 years. Other than that, everything that we've done has been the same. So we focus on the same strategy, same mentality, same stuff that we've been doing for 27 years. This is how we earn our living. We do some teaching stuff. I'll show you about that in a second here, but most of what we're doing is trading. And we've involved our son, Connor, in this whole thing, right? He's been down to just about every one of the events that we've done over the years. He's sitting on the bull there in New York. We love, we breathe trading, and it's everything that we've always dreamt it would be. It's something that you can do. It's something you guys can do for a living if you wrap your head around the psychology. We meet a lot of people who say they want to do this, and then the psychology gets the better of them. And we're both, the PhDs that we have are in psychology. I'm an organizational psychologist. Julie's a social psychologist. We've got business degrees as well. I'm an MBA in international business and finance. I understand business. I understand how companies work. All of that's great. None of that is stuff that you need. What you really need is to understand yourself and understand your own psychology. So this fall, we are supposed to be hosting a TV show called Trader Nation. And Trader Nation is fantastic, and the pilot was great, and all that stuff was great, and then we had a writer's strike. So I don't know exactly when this is going to be on air, but it's going to be on air, most likely on the Scripps television networks. You'll see us there, and what we're talking about in our live broadcasts is trader psychology. We're taking deep dives. We're looking at the first episode was called The Gamblers. So we took people from the live training that we do. We've trained a lot of people how to trade over the years. They're successful traders, but they've had to overcome obstacles. And they've graciously volunteered to be interviewed on the show. And part of what we're talking about there is, okay, well, what did it take to overcome those obstacles? What did it take to overcome that stuff that was preventing you from being successful? So on the first show, one of the guys is a gambler in that he gambles on all sorts of startup businesses. He likes to go to Vegas. He likes to do things that are a little bit higher risk than most people do, but he's pretty structured in his thinking. Well, how did he become successful in his case as a futures trader? So he trades the futures against one of the strategy actually that I'm going to show you today. The other fellow on the show that day is a hardcore gambler, right? He's a Las Vegas type who likes to go over and put it all on the line, and $100,000 up, $100,000 down. It's all the same to him. Water off a duck. It's how he's wired. So how did he overcome that? Because that's definitely not how you trade the markets. We're going to do those psychology deep dives on the show. We're going to interview top traders on the show as well. The very first episode, we've got a fellow named Tim Bigham on. He's with the SIBO. He's been trading on the floor for years. We're going to have a lot of people who some very obvious names that are going to be on the show. I'm not going to reveal right now, but that's part of it. So how did they overcome their psychology? How did they wire themselves to trade? And then we're going to talk about things like alternative investments, cryptos, and all that stuff, and NFTs, and you know, all the stuff that you hear about on the news every day, and how's that going to impact things. But I'm also going to talk market strategy. And market strategy is something that right now I'm doing online every day in a live stream, and you guys will see. You can be part of that every day. You can just catch it. It's only about 5 minutes. It's the thing that we would be doing on the show if the writers went on strike. Next thing I hear is the directors are going on strike. So this might not be a fall show. This might be a 2024 show, I'm told. But one way or another, it's going to be a show. And finally, America Asks. So if you would like to send me a question about the markets, you can do so. You can take a little iPhone video of yourself asking a question about what's going on in stocks, what's going on in the broader markets, and you just shoot that off to me at adrian@traderinsight.com. And if we use it on the show, I think you get a coffee mug or you get some kind of cool like show paraphernalia. All right, so that's my plug for a show that's iffy right now for the fall, but might be on in the spring, and I would love for you guys to catch it if you can when we are on air. So I said earlier, you know, over the years I've done a lot of stuff that focuses on our trading strategy, focuses on our trading style. You can see lots of interviews with me in magazines. You can see write-ups in books about the stuff that we do. The thing that comes around and keeps resurfacing in some of the interviews and the articles that I've written is I'm a trapper. I'm not a hunter. So what I'm showing you today is going to be about how to get your psychology in the right place to set yourself up to let the trades come to you. So we're not out there trying to figure out, you know, how we can chase momentum. We're not out there trying to figure out how we can hop on the train once it's left the station. What we're always looking for is, here's a level something's going to happen at. When price gets to that level, how do we get in front of the order flow? We're order flow traders, always have been. Any of the work that we've ever done in the markets has been about when price gets to a certain level, we want to hop on because we've done analyses that tell us that this is where price is most likely to take off from. So all of these articles are about that thinking, and all of the books that I've written over the years are about how to put yourself in front of the opportunity. Around the Horn, a trader's guide to consistently scoring in the markets. That's out of print right now. It's going to be back in print very, very shortly here. That was a book that I wrote in the late 1990s that was originally titled, hang on to your hats, A Multivariate Analysis of Covariance in the United States Equities Markets. And my publisher said, unless your mom is going to buy most of the copies of this book, it's not going to sell. Could you wrap it around something else? Could you come up with an analogy? Could you come up with a metaphor? Could you come up with something that makes sense to people and doesn't look like it's a book about statistics? So we stripped out some of the statistical stuff, most of it, and really geared the book to pattern recognition. And you can go and you can find patterns that are identifiable either by flipping through charts. I flip through about 1,000 charts every night to find my setups for tomorrow. And my setups for tomorrow are I've usually got about 10 trades on deck. I find those they just pop out at me when I flip through. And you know, you can also use a scanner. There's a great scanner available from the folks at Metastock. If you have Metastock, or if you don't have Metastock, you're not going to be able to scan for it using this. There's a TradeStation has scanners, and there was a Realtick scanner available. But really, the gist of it is these patterns that I've identified are things that are all about the cyclicality of markets. Markets move through cycle phases, and each one of those phases in that book was related to something in baseball. I love baseball. I love the Dodgers. Right? We live out in Pacific Palisades, effectively on the border of Pacific Palisades and Malibu, California, and we are Dodgers fans. So diehard Dodgers fans, I found it easiest to relate the patterns that I look at to baseball. And I also find it easiest to relate the psychology of trading to baseball. Trading is a solo sport. Trading is all about stepping up to the plate and having a fresh head about what you're doing. You're not thinking about the last time you hit a home run. You're not thinking about the last time you struck out. It's not a good day. It's not a bad day. It's just a day. and you're going to swing at the pitch that's coming at you. And all of those patterns in there were based on some heavy statistics, right? Fastball is an expansion of range and volume. Infield fly is an exhaustion reversal. Line drive is sort of a gap and go. 3-2 pitch is a pullback into an expansion move. Backdoor slider is an expansion move with an inside day. Switch hitter is a fib pullback, and double header is sort of this kings and queens kind of a setup. Every one of those things is based on statistics regarding what happens after one of these patterns forms, and every one of those things is based on the cyclicality of the market. So we're just following the market through markup, accumulation or distribution, markdown. How often can we hop on to what's coming next in terms of order flow based on where we know we are in the cycle, right? So we've done a bunch of education. We've got 4 different educational programs that we run on the site, and it's traderinsight.com. They're in depth. They are mostly online things that include live events. So for instance, the Income Trading Academy that we do is set up with a live event that we do over in Miami Beach. So we fly down to Miami because the time zone is much better than trying to do something here in Southern California. And the takeaway here, when you look around that table, is all those people in each one of those pictures. We do this twice a year. We only do it for 20 people. That's really the extent of what we're looking to do in terms of working with people. Is we want to make sure that we are providing education the way that you do for adult learners. We want to make sure that we can keep things sort of relevant for people, and we want to make sure that we can work with people all year. And you just can't do that if you have 1 million people on your program. So we just do it with 20. And these 20 people come, and they're from every walk of life. So when I look around the table in the bottom left picture, there is a cattle rancher from Texas. There's an attorney from Southern California. There's an attorney from North Carolina. There's a guy who owned a plumbing contracting firm. There's a guy who owned a chemical firm that sold, of all things, like urinal cakes. There's a guy there who is a physician, right? And I go around and I see all these different people from these different walks of life. And what I know about them is they're coming into this with the expectation that since they were good at what they did, since they were good at their business, they're probably going to be good at this too. And the first thing that we do when we start working with somebody is we say, we have to tear down sort of the psychological predisposition you have to saying, I'm smarter than everybody else, so I'm going to be able to do really well at the next thing that I do too. And just say that this is more about your relationship with money, your relationship with loss, your relationship with emotion, right? And figure out how are we going to get you in front of the opportunities to do well, and then get you to actually take those opportunities. Because the biggest thing that I've seen with any of these guys right here is that the toughest part of getting them to become profitable traders, and we've done these boot camps, for instance, since it's been, Connor is 15 and we've been doing them since he was 3, so it's been 12 years now that we do 2 of these a year. Most of these guys are still with us. Most of these guys are still trading with us. And what we really find is that in order to get them in front of our strategies, what we need to do is overcome the challenges that most people have. So our strategies, again, all based on order flow. There's lots and lots of stuff that you can do with the markets, and the stuff that we choose to do is to find opportunity based on the footprints of money, based on following what's been happening in the market. Where is the money moving? How do we go and capitalize on where the program trades are going to be, where the AI is going to be loading up? AI is the hot topic now. I'm going to tell you, it's been around forever. I used to do a thing in New York where I was working on algorithms for a hedge fund that I was working on, and that's AI, right? Those algorithms are just going through and saying, here's where we expect that there's going to be an inflection. Here's where we expect something's going to happen. And the important thing about being able to execute those trades and be in front of those opportunities is you actually have to pull the trigger on the setup. So a lot of people will have extreme difficulty, say the first time around. So I'm going to show you the example in the triple Qs for the last couple of days in a minute here. One of the people who I work with very actively, it's a family office actually that I do consulting for, that I do live trading with during the day, guiding them through their index trading strategies. And a lot of times what will happen is when the first opportunity to enter a trade comes along, they pass because it doesn't look that likely, let's say, or it looks scary, or it's people all fall into the same categories. Things scare you when you see them coming, or things feel uncomfortable the first time. Boom, it hits a profit target. They miss the trade. Second time around, it comes down and it hits the entry, and oh my goodness, right? And I was away from my desk, just magically, right? Magical thinking. For some reason, I was away from my desk. Third time around, it comes down to the entry again. Now they've missed 2 profit objectives. Third time around, what happens is it's getting to that order flow now 3 times. It's less likely that it hasn't already chewed through that order flow. Now they wind up taking the trade, they wind up losing money, and then I get that. Well, I knew. I just knew the time that I got into it, I was going to lose money. It's not about the time that you got into it. It's about the times you didn't get into it. And over the years, the fascinating thing about doing this teaching has been for Julie and I that we get a lot of sort of psychological guinea pigs, but we also work with them on overcoming this stuff. We see the same things over and over and over again. People tend to let losers run, and they cut winning trades short. It's exactly upside down of everything that you've been told. If I asked everybody in this room right now, what do you do with a winning trade? Do you let it run or do you cut it off? Everybody would say, oh, you let it run. And I say, what do you do with a loser? You cut it off as soon as you know that it's gone beyond the parameters of what you set up. Here's the reality. Most of you are Americans. Americans are wired for winning is good, losing is bad. My kid played on all sorts of little league teams. They kept getting trophies even though they didn't win. And I kept saying, this is a psychological phenomenon that is so unique to us as Americans, right? That you always have to win, that it's such a bad thing to not be the winner, that it puts us all in a position of, if I start seeing something tick in my favor, I'm going to take it off because it feels good to book a win. So first you have something, your target's $1, and you take it off. And think about this when I show you these Qs trades, right? The triple Qs. Would you stay in all the way to the targets that I show you, or would you likely wind up getting out somewhere in between just because it feels good to book 10 cents, 15 cents, 20 cents, 30 cents? And then on the other side, when it starts going against people, I'll hear people say, well, I took a stop on that. And then they'll say, I took a stop on something else. And then before I know it, I hear them saying, I didn't take the stop because this thing always comes back and goes in my favor. And then my response will be, until it doesn't. And when it doesn't, you're going to have a psychologically devastating loss, because what's going to happen is it's going to cascade against you. And now you didn't take it off because losing feels bad. You didn't take the loss off the table, and you're stuck with something that could very well damage your account to the point that you're probably not going to come back into trade tomorrow. You're not going to work today. You're not going to work tomorrow. You're not going to work Monday. And before you know it, you wind up in this loop of not feeling like you know what you're doing. When in reality, I've said to one of my guys, I've said, you know exactly what you're doing because you can explain it to me as well as I can explain it to a room full of people. So what's really going on here? And as you go down that list, you'll see there's a lot of things there that people tend to do. And one of my guys, he's very well known in our group. Our group is small, right? We've only got, there's a couple hundred people total in our trading group. And yeah, he'll be, everybody knows John. John gets big profits in the morning, and then once he's got that money in, he's a gambler. He's on the first show. He's on the very first episode of our Trader Nation. He'll book $1,500, $2,000 first thing in the morning, And then he'll say things like, well, that's house money. And in the afternoon, he gets reckless, takes unplanned trades. I keep saying, plan the trade, trade the plan. I thought I saw momentum, right? Other people hold trades for a home run. They'll hold them overnight. We're intraday traders. There is no overnight. I don't understand. Why did you hold the trade overnight? Well, it was really going in my favor. And I'll say, well, how many times, if it closes in your favor, does it actually open in your favor the next morning? And the response that I'll get is, well, I've never done that work through. I've never done that analysis. And then the result when they lose is that they go and reduce their position size on the next trade. All of these things wind up being a psychological conundrum that's really hard to get out of it. And I would say that the solution is this is what I've done over the years. Everything that I publish, everything that I put out there these are all the trading plans that Julie and I actually use in our actual trading. And the guys who work with us in the room, you're welcome to join us in the room. I heard the last guy talking about a trial to what he's doing. You can send me an email and just say, hey, I want to see what you guys are up to, see what you guys are doing, and I'll let you look at it for a couple of weeks. I've got no problem with that. But the thing to realize is it's not about cherry picking, oh, I like this strategy or I like this strategy. This is about a gestalt, right? This is about a group of things that work well together. And if I look through this list, NASDAQ volatility bands, right, that's one strategy that I trade each and every day. It's on 3 stocks. I'll use 3 super cap stocks, Microsoft usually, maybe Meta, Netflix, Tesla is almost always on there. And I just go through and I set up the night before where the order flow is likely to trigger a program trade the next day. And if those trades are working, that's great. If they don't work, it's probably because they didn't set up at all. If they don't set up at all, what I'm not doing is forcing a trade because it's my only thing, right? It's the only thing in the stable is my volatility bands. And if I don't get something today, holy cow, I won't be doing anything. What I've got instead is I've got 2 SD gap reversions, right? That's my big statistical trade. I call it Baltimore chop in the room. I was told I should have called it Manz bands. I still shudder when I think about it. But the Baltimore chop trade, the 2SD trade, that works best during earnings season. That NASDAQ fastball XRV, that's an expansion of range and volume that I developed for a hedge fund. It's a trade that goes through, identifies institutional order flow and who's making the book on the particular trade for the day, figures out whether or not there's an opportunity there tomorrow. The NYSE trading plan is still the around the horn plan, right? The thing that I developed originally is still right there, still being traded exactly the way that we've traded it since 97, and it's part of the mix. And the QQQ order flow trades, that's also been something that we've been doing since the late 90s. The reason this stuff all works for us is, even though nothing in there works all of the time, when you put all of it together, you've got uncorrelated strategies that are working for you at some point. So when something's not working, a couple other things are. So you've always got the benefit of, I've got a bunch of trades on the table that could go off today. And if they do go off, I've also got other stuff that I'm working with that will offset any deficiencies in one plan and make up with the strengths that are happening today. So yesterday is a good example. Here's my trading plan, right? This was the plan from yesterday. The gouge sheet is there for Wednesday, June 7th, right? And you look down at that list there, you got Alaska Airlines, ALK, CMC, you got Harley, HCO, CarMax, Toll Brothers, right? All these things are set up. They were all longs. What happened in the market yesterday? Right? NASDAQ tanked. NASDAQ went down the chute. So what happens if what you're focused on is just the momentum stocks in the NASDAQ and you're only looking for long setups yesterday? Well, you had nothing going on. But if you look at this trading plan, ALK, CMC, HOG, HZO, KMX, TOL, HZO was the only one that didn't trigger. Every other thing there triggered and went to the profit target. The plan did $6 a share yesterday. And what you're going to find is a bunch of people who are working with us. So all the guys who've been to boot camp, right, they get this every day. They're also setting up their own plan. That's the point of the boot camp. And I'll say to them, did you get those trades off? I've got one guy down in Tampa, Florida, man, he gets them off every single day. and he does all of it. He does all the different trading strategies that we taught him, and he's doing great. He does really great. And the ones who don't do so great, they'll say, you know what, I set up my plan, I set up your plan, and nothing triggered for the last 2 weeks. I didn't take any of those positions. So I wasn't watching them. Well, you weren't watching it. It really doesn't take anything to set this stuff up. And if you have a diversified set of opportunities in front of you, then you get the chance to trade a bunch of different things over the course of the day. If they don't trigger, they don't trigger. They don't impound your margin. They don't do anything. They just sit there. And if they do trigger, right, here is this is 2022. So this was that around the horn plan. And what you can see there is we do a deep dive analysis into everything that we're doing. What you see up there on the top, that's our psychology. That's where we go and assess whether or not, even after 27 years, do Julie and I have bias in what we're doing. So I'll go through and I'll look at the pattern distribution, right? How many times did I find a fastball setup? Then I look at the triggered pattern distribution, that's an expansion of range and volume. Then I look at the triggered pattern distribution. Well, how many times did the trades that I thought were set up for the next day actually trigger? Am I following the cycle? Am I following the market cyclicality? Or am I doing some sort of pie in the sky thing where I just happen to like an expansion move because they tend to really have a lot of momentum on them? And am I picking trades that then don't trigger, or worse yet, when you look down pattern profitability, are they not the ones that are generating the profits? When I look at this chart here, what I see is over the course of 2022, the long to short ratio is right. The overall profitability is right. The pattern distribution to the triggered pattern distribution is right. And all this stuff, if you do want to work with us on the site, if you want to take a trial and everything, you can download every single trading plan that we've created since 2005, I think, or 2006. And you can also download the spreadsheet for the triggers and the blotter to show you what happened with each one of those trades. And it's not this, again, pie in the sky thing of maximum favorable excursion. Each one of the trades has an entry, a stop, and a target, and it's that simple. And did it hit the entry? Yes or no? If it hit the entry, did it hit the stop? Did it hit the target? What's the result? That's what you're looking at here. On the bottom is my equity curve for 2022. Here's the equity curve for 2023. 2023 has been a much better year than 22 was overall for the NYSE plan. So we're at 28 bucks a share traded right now for the year on the NYSE trading plan, on the around the horn plan. I can go through, I can analyze exactly what's going on. I can see how often was I cherry picking, how often was I curve fitting data in my head, trying to find an opportunity in something that I like. I can make sure that everything is exactly right. I can see there that my bias was on the short side, the long to short pie up top. I can see that my profitability was mostly generated by the short side. I like that. I can see the overall profitability, right? Everything makes sense to me. I've got lots of analytics in place so that I can make sense out of what's going on in my trading business. Because either trading is going to be your business or it's going to be your hobby farm, but it can't be both. When I get ready to work, the first thing that I'm doing is I'm saying I need to be able to set up to profit from the open. So I've got a set of trades that are based on what's going to happen at the opening bell. I've got a set of trades based on what's going to happen after the first 5 minutes. I've got a set of trades based on what's going to happen after the first hour and a half. Those are the triple Q trades that we do. And I've got a set of trades that are just sort of automated and happen over the course of the day. This is all about aligning these three things: strategy, your discipline, and your psychology. And a big part of this is the workflow. So I know ahead of time that before the market opens, I'm going to program my XRV trades and those NYSE trades, because those are things that can just happen without my intervention. There's no reason for me to sit here and monitor what's happening in those trades, because I have every single parameter set up ahead of time. What's the entry? What's the target? What's the stop? The only thing that can happen if I get involved in those trades is that I'm going to mess them up. Then at the opening bell, I'm executing trades on the NASDAQ, usually in Apple. So I'm looking for, a lot of you guys are options traders. Options market makers are effectively taking bets. And what they're doing at the open on stocks like Apple that have a lot of options activity around them is they're buying stock to hedge those bets. We've got a strategy that we do that goes and capitalizes on that. It goes through, it analyzes the pre-market data. We figure out where the most likely inflection is going to be. And right at the open, we look to hop in front of the momentum that's going to be caused by those market makers picking up those positions. It's momentary. It's only going to last for the first couple of minutes of the trading session, but usually it's worth anywhere from 60 cents to about $1 per share traded. So I know what the ratios are on the wins to losses on those. I know it's a favorable trade. So I'm always setting that thing up before the market opens. I know what I'm going to do at the bell. After the first 5 minutes, we shift gears. I'm automatically looking at the screen that I have. I got a 30-inch monitor here with nothing but opening gaps on it. It's got an algorithm that we use to identify which opening gaps are 2 standard deviations out in terms of volatility and are likely to have a mean reversion. And we do this with all the guys who went to the boot camp and all the guys we've worked with on these gap trades over the years. They come in and they work with us in that room for the first 45 minutes of the session. All we're doing is analyzing like the 5 or 10 gap trades that meet our criteria and finding the 1 or 2 that we want to get on because we've got a 95% probability that it's going to shift back into the distribution. And I'll take that probability any day of the week. So we're focused on that. After the first hour is over, if anything, we're monitoring those automated trades and we're heavily focused on trading the triple Qs in terms of order flow. Where is the order flow going to be? This is the trade that I'm going to show you in a second here. So again, in terms of the workflow, your strategy is I've got 1, 2, 3. I'm going to automate the opening continuations. I'm going to go through and find the opening reversions, and I'm going to set up my super cap volatility band trades, the ones in Microsoft and Netflix and Tesla, Meta, right? Those are sort of my regulars. They're showing up for that trade right about now. And then once I've got the workflow in place, I'm going to focus on my discipline. I'm going to plan every single trade. I never take a trade off the cuff. I have got no idea how anybody says they can just sort of glance at the screen and decide how they're going to hop on. 20-something years later, I still think jumping on momentum is suicide, but I've got it set up so that I've got very precise entries that are set up based on price action. Every stop that I have is based on a violation of some support and resistance, and you have to realize that the algorithms out there are also looking for that support and resistance level, and they're looking to go and cash in on that order flow. So you can't use the support and resistance as a target line. You have to use it as a threshold. When it passes that support and resistance, that's when we're going to stop out. And the profit objectives are based on the same thing. Where's there a logical place to assume, usually it's around a support and resistance area, that order flow is going to go and impact the price of the stock? That's going to be where I'm looking to take a target. And my money management rules are always completely objective. On the around the horn trades, it's all set up. If it gets 50% of the distance to the profit target, my stop is break even. I'm never setting a trade up and just letting it swing because they always seem to come back, right? There's always an objective rule to every one of the trades that we do for where you're going to move your stop to risk free. And then once you have all these things in place, your job is just to go in, enter at the planned level. You want to control your slippage, use orders that make sense, use bracket orders, use conditional orders, and go in there. And even though stop, you can really only in the market you can use market orders and limit orders, but on your software you can almost always use stop orders. So you've got a stop limit order in, you put in your execution threshold is your stop price, and your limit is the worst price that you're willing to accept. You've controlled the slippage. You don't want to get into a trade that has a 70 cent profit objective and have 35 cents worth of slippage, because automatically now your P&L, your risk to reward ratio is going to be upside down. And you want to make sure that is all automated, right? Everything is done with brackets. Everything is done so that you can predict ahead of time what your best case and worst case scenarios are going to be. And I always exit at the stop or at the target. I'm going to show you an example from today where I'm just looking over at my monitor here and I see that it ran well beyond where I exited the trade, but I don't care. Right? My goal is to measure my performance. My win or loss is not based on whether or not I made the maximum amount of money. My win or loss is based on, did I do what I said that I was going to do? And that brings us then to mindset, right? To the psychology of the whole thing. You need to know your relationship with money. You need to know how much risk you're willing to accept. And then you need to know how much ability you have to follow through, right? Can you follow through on a trading plan? This goes to like the big 5 personality constructs. Your relationship with money would represent your risk avoidance or your risk acceptance. Your ability to follow through would represent your conscientiousness. Risk obviously is again goes back to the relationship with money, and then your ability to control boredom and how neurotic are you, and do you blame yourself when things go wrong? And if you're sitting in front of your computer and no trade has come up for the last 3 hours, are you able to just say, well, you know what, today's not the day, or do you go and fire one off just because you feel like you should be doing something because people who go to work? That's not part of my strategy. My strategy guidelines are pretty straightforward. Identify the institutional order flow, identify the trend, find confluence of indication. So I look at, I've got a constant hierarchical cluster analysis going on of price on my screens. I use Realtick, there's an indicator.
Adrian, I think we've lost your audio. Let's see. Either that or I'm lagging. Can you guys hear Adrian speaking? Okay. All right. I'll have to message him. Okay. I was worried that it was just me. All right. Just a second. Two slides now.
You still have me?
There you go. Now you're back.
Okay.
Can you go back one slide?
Sure.
We lost you right as you were about to switch to the slide before this.
Before this?
Yeah. Right when you were finishing this one,
Okay.
right about the last thing you were saying there. And then when you went into that next slide, we didn't have any sound.
Gotcha.
So I was just texting Julie to say, ah.
Yeah, I think we've got some sort of an internet hiccup going on. But I was just saying on this one that, you know, your ability to deal with boredom, how much do you
Yeah,
feel?
you were saying, do you make a trade just because you think you ought
Right.
to, or do you run by your plan? And
Exactly.
so, yeah. So
And
yeah,
then,
Kurt's saying, yeah, you were on your strategy guidelines when the sound went out.
yeah. So the strategy guidelines, right? This is what I was going to say here is it's all about, for me, it's about process, right? And I want to be able to go through and say, where is the institutional order flow? Can I identify exactly where I think the inflections are going to be? And then I want to find the trend. The trend is your friend is not BS, right? It's like you can trade reversals, but they're reversals within a trend. You want to see where, you know, where is price likely to, you know, go in reverse based on the underlying dynamics of what's going on, the confluence of what's going on. The confluence that I'm referring to here is I look for support and resistance. I look at a hierarchical cluster analysis of volume. So it's like volume by price the way that some of you would see it in Thinkorswim. It's volume profile the way you would see it in some of these pieces of software. But the way that Realtic implements it, that the volume by price that I worked on with Realtic to develop years ago, it goes through and it analyzes sort of how significant is a price level now, and it'll go and delete some of those levels, some of those volume by price thresholds to show me where the opportunity is. That's all. And then, so you can use either. I mean, you can use if you're a Realtic user, or now it's as it's their execution management system. But I'll use that. I'll use the support and resistance levels. I use floor trader pivots. I use the volume weighted average price. I use the anchored volume weighted average price. I use 2 standard deviations of volatility. And I go through and I just look at this stuff over the course of the day and I say, is it all lining up? Are there 3 or 4 things that are saying that the price action that I see in front of me, the price that I see as an opportunity, is actually an opportunity because there's a bunch of stuff that's likely to happen there. Based on that, I plan my entries, I plan my exits, I go through and I say, here's where I expect it to inflect. If it does inflect there, I'll take it the very first time. I'll take it the second time. Third time, I'm starting to worry about going back to the well too many times, so I'll start looking for the next opportunity. And this is the process that I have that makes me a disciplined trader. Right? I'm a disciplined trader because I confirm the opportunities that are in front of me. Once I've seen the opportunity, I set up a bracket order, I set up a conditional order. I make sure that I take myself out of the equation once the opportunity develops and gives me a reason to be in the trade. Once there's a reason to be in the trade, if I did the analysis, then what I'm assuming is when price gets to the level that I want to get in at, if I start thinking about it, I'm going to find a reason to violate my discipline. And that's after 27 years, right? So just set it up. Make sure that the trade is within your allowable slippage. Make sure that you know exactly what the best and worst case scenarios are. And when the trade is moving in the direction that you planned and all the pieces of the puzzle come together, take yourself out of the equation. Just let the thing happen. Trade like a program. Everybody talks about the algos are making money and the programs are making money, and why am I not making money? Trade like a program. Here's the example. This is yesterday. So in yesterday's market action, right, in yesterday's price action, so what you're looking at here is up to about 1:30 Eastern time. So this is when I did the broadcast yesterday, and you guys can all get that for free. And then once you've watched it for the next 6 months or however long the strike takes, you're going to be avid watchers of the show. You're going to want to see what's going on. You'll be flipping that television on and watching commercials and every other thing. But for now, you can just sign up and you'll get the live stream. Whenever I'm ready to go. Sometimes it's at noon Eastern time. Sometimes it's going to be at 1 or at 1:30 Eastern. It's all about when the opportunities are there. You look at this chart, and what you see here is where confluence is happening in the market. We had a big sell-off yesterday. And if you weren't ready for it, the market looked sort of random. But if you went through and you analyzed, you can see out on the right axis there on each one of the charts is my volume by price. You can see on the bottom left chart where I've drawn support and resistance as the day goes on. You can see on the bottom left chart where my anchored volume weighted average price levels are. Those are those orange lines. On the top chart on the left side, you can see where the volume weighted average price is sort of floating in for the day, and where the threshold levels are for a fib retracement of the move from like that green pivot line there where it inflected, right, down to 349.83. And you start putting the pieces of the puzzle together and you say, you know what, if I get back up to 351.06, I've got a really good short sale threshold there. And I've got a very good reason to assume that if it gets down to 350.20, that's a good place to take a target. Doesn't matter if it keeps going without me. I've got all the pieces of the puzzle put together. I've got a volume by price threshold that's lined up there. You can see on the right axis how right in those lines that I have drawn, you can also see those green volume by price bars have clustered. That cluster analysis tells me that's a very likely inflection point. over the course of the day, what happens? We get the inflections that we're expecting. We get the moves to the targets that we're expecting. And as the thing plays out then, so if you watched the live stream yesterday, and you can always watch the replays at traderinsight.com, we post them after the fact. I think it's a lot better to just hop on the live stream for a few minutes and see what's going to happen rather than what did happen. But if you look at the rest of the day here, you can see those threshold levels that we identified played out a couple of times. And I don't care that I only got 3 or 4 trades out of the day on a stock that made this big move. Stock moved $6. I managed to capture $4. I was only in the market for about a half hour of the total time that the market was open in the triple Qs. I controlled my risk. I got in front of opportunity, and I knew exactly why I was going to do what I was going to do, and I knew exactly how to set this thing up ahead of time. A day later, here we are today, same thing, right? So now we had a move to the upside. We get the retracement. We get a retracement move up into the range. And you can see where I've gone and identified all sorts of threshold levels over the course of the day. Again, today, the time that I went and decided to talk to these folks about what I thought was going to happen in the afternoon was at 13:30. So it's at 1:30 Eastern time is the first time that I'm really going through and identifying, I think I can put people in front of opportunity here for profit going into the latter part of the session. What do I think is going to happen as the day moves on? What do I think is going to happen as the day progresses? And if you look at this chart, right, and then you look at the range from that, the pivot line, right, the central pivot at 351.37, that was the level that we identified as a good inflection point for an entry. And then you look up above at about $352 per share on the triple. Again, you can do this with the NU. You can do this with the QQQ. I don't really recommend doing it with options. I think the spreads kind of eat you up, especially on this particular trade. It's going to be too close and it's going to be too fast, and it's not going to move enough on the option after you get into it to really capitalize on the trade. But futures traders, QQQ traders, this is pretty much a no-brainer. 351.37 up to 352 at that orange line. You can see there it came back down again. And once it comes back down, do you kick yourself because it went to 352.28? No. You say, I planned my trade and I traded exactly by the parameters that I set up for myself. And a little bit later, you get the opportunity. This is the next one that we were working with our family office friends. 352.28, when it came back down and dipped that line, you can see there on the right side of the chart, 352.28 give us another opportunity for an entry, and this time the target was 352.67. We're moving a lot of shares on these, or you can move a lot of futures contracts on these. That's, that 40 cents or 39 cents doesn't seem like a lot of money, but do it 4 times over the course of the day and be right most of the time, and it starts adding up in a big hurry. Doesn't matter how much you're trading. You could be trading 100 shares and it starts making sense. You could be trading 500 shares. It really makes sense. 1,000 shares, right? I'm in business, and you just do this over the course of the session. And when it hits that profit target, you take it. Now, it doesn't matter that it kept going. This one kept going and kept going right into the close. We hit 353. What we hit 353.50, I think, on the 353.62 by the end of the trading day. I don't care that it went another $1. I knew what I wanted to do. I set it up and I traded it exactly the way I said that I was going to trade it. So if you want these live streams, again, these are, this is just something where if you go to traderinsight.com/live-stream, all you have to do is, it's going to ask you for your first name, your email, and your phone number that you can get a text at. So that's how we distribute the live stream. Is we send out a text alert that says Adrian's going live at 10:50 a.m. Pacific time, and it's going to talk about the trading strategy for the afternoon. And then you just click that link in there, and it just goes to like a Vimeo live page. Eventually, this will all just be part of Trader Nation. It'll be part of the show, but for now, it is at least for the next 6 months or so, I would assume, or next year, it's going to be this live stream strategy that we do. I'm live on camera. We've got the benefit, or the horror, I should say, of having a bunch of TV cameras in our office. They're just going to sit here for a long time, so we decided we're going to use them. And what you're going to see is I'm sitting in front of my station here. I've got 8 monitors that I'm looking at all day, every day, and I'm going to go through and give you my analysis of what's happening in the cues, where I'm going to get in and out of the position if I get the opportunity to do it. And then you can go and you can drill down on your own charts and decide, is that something you want to do? Or better yet, just drill down on your own charts and have a look at, does this stuff make sense to me? Do I see the logic behind setting up trades that way? Because if you do, I'm going to tell you, 27 years later, it's a really clean way to trade, a really good way to make a living trading, and to take the ambiguity out of it. And then if you want, I'm going to be honest with you and say I don't do a lot of free trials to stuff, because I find that when things are free, people just don't show up. They sign up for a free trial because it sounds like a good idea at the time, and then the bargain becomes something they don't bother looking at. But if you think you'll look at it every day, you can look at my trading plans. I'll give you the next month. You can look at them all and decide, is that something for you? Do you maybe want to do something with us in the future? Just send me an email at my email's under my picture there, Adrian@traderinsight.com. If you shoot me an email and say you're interested in doing it, I will be happy to sign you up for a month and give you a username and a pass. I'll get Mike to get you a username and a password to the members area. And then all we would ask is, if you come into our trading room in the morning, that you understand those guys have been trading with us for 10 or 15 years. Those are all guys who have been through the boot camp at some point. We work together, and it's not like an open outcry trading room. We're not looking for stuff off a wire or stuff off some hot list somewhere. These are all pre-planned trades. So you just need to do your homework the night before, take a look at those trading plans, and then the next day when you come into the trading room, you'll know what we're doing. You won't be saying, well, why are you getting into this? You'll have the plan in your hand. And then the reason these guys are there is just sort of to alert each other to, here's this opening gap, here's this volatility band trade that's coming up, because not everybody is lucky enough to be working with their trading partner and their wife. I get it, right? You need some folks to give you a heads up. But go ahead and do that live stream thing. I think you'll enjoy it. If you don't like it, right, just make sure that it's going to send you a text message. And I think you have to reply yes, or you have to reply start or something to get the link to the video each day. And then if you decide it's not something you want to do, you just respond stop, right? It's pretty straightforward. All right, anybody have any questions? I think we're done here. We're at the hour.
All right, I'm going to check one more time. I did say it was now time to ask their questions. And I think you gave us your email address, though, and I did post in the chat the link to traderinsight.com/live stream. So we should have somebody going on that. That was awesome. I really appreciate you being here with us, Adrian.
All right, Sherry. Listen, I appreciate you having me, and I'm sorry the internet bombed out. It's been 2 days of disconnects here, so I don't know what's going on.
Well, at least we got you back. I just am glad about that. And I usually listen with one ear, but I kind of have it set up a little bit different now. So I knew the minute you were gone, it was like, uh-oh, did I freeze or did he? So that's why, we didn't miss anything, because you could go back. I knew exactly where you had left off, and it was great. It was awesome.
That's great. That's great.
All right. Well, excellent. I see Steve is saying excellent presentation, exclamation, exclamation. So thank you. That was really good. Right, and Aaron wants you to know too. I just want to tell Adrian that I very much like and appreciate his daily live streams. Thank you.
Oh, great. I'm glad you guys are enjoying them. It's a
good deal.
Yeah, we've got a bunch of people watching. It's been really cool.
Yeah. All right. Well, I hope you'll come back again in the future. One of these days, you and Julie are going to have to tag team. And did your little dog make it? Is everything okay with your little dog?
No.
Oh, I'm sorry.
That was very tragic. But he
I'm
wound up,
so sorry.
he had sepsis and left
Oh,
us. Yeah,
yeah. No, when that's the case, it's pretty much done. There's no getting out of that.
that was very
All
bad.
righty. Well, I'm sorry about that. And I believe you probably have a new four-legged friend in your future.
We do.
Uh,
It'll happen. Yep.
yeah.
Okay.
All right. Well, you give her my best.
Okay, Sherry.
And Randy's saying, been there, done that. My condolences. So,
Thank you.
yeah.
Thank you. It was really hard for us. So thanks so much. Yeah.
You know, people who don't have animals don't realize that they are almost the same as having children.
Yeah.
You know, I realize children are humans, but sometimes fur babies are better.
Listen, he was a little Yorkshire Terrier, and he was the second one that we had in our life. And he was around for 10 years, and we thought he was going to be around for 15 or 16. And Julie, this is 2 months now, and she still walks around bursting into tears, and
Oh,
it's awful for all of us. But
well,
it's
you tell her that is normal and to not beat herself up for it.
all right, Sherry. Thank you.
Thank you. You have a good day.
Yeah, you too.
Come back again.
I will. Thanks.
All right. Thank you. All right. Was that great or what, you guys? Um, that was Adrian Mance, Dr. Adrian Mance of Trader Insight. He's given you a link to see his live streams. And he also made you an offer that if you email him and you want to try his trading room, he's going to work that out for you.